Hello everybody, welcome to the weekly market update with me, David Jones, and Capital.com. It's been a while since I've done one of these, so I might be a little bit rusty, so bear with me. But what we're going to do, we're going to have a catch up with what's going on in markets so far this week. And even though we're only 2.5 days in, there's plenty going on, and have a look at perhaps what are the interesting markets to watch for the rest of the week. And if there's any stuff that you want looking at, if you use the chat thing at your end on YouTube, and we'll take a look at it once we've looked at those markets. Before we get into this, of course, there is the risk warning. So spread bets offered in the UK only are complex instruments and come with a high risk of losing money rapidly due to leverage. 85.24% of retail investor accounts lose money when trading spread bets and CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. The disclaimer: all information that is provided during this seminar is for educational purposes only. The presenter, me, is not a financial or investment advisor and is not authorized to provide recommendations on any instrument of any kind as part of this presentation. The strategies showcased are applied on hypothetical scenarios. Any instruments that are mentioned throughout are cited only for illustrative and educational purposes. The webinar is not intended to be a personal recommendation or an offer to buy or sell any financial product or instrument, and must not be construed as advice from the presenter. Capital.com does not represent that the material provided here is accurate, current, or complete, and therefore should not be relied upon as such. Any information that may be provided relating to past performance is not a reliable indicator of future results or performance. To the extent permitted by law, in no event shall Capital.com or any affiliate or employee have any liability for any loss arising from the use of the information provided. Any person acting on the information does so entirely at their own risk. There you go. Consider yourself risk warned. Let's take a look. Let's take a look at what's going on. There's a lot going on, obviously. I thought we'd kick things off with gold, though. Let me see. Can I make this thing full screen? Like I say, I am a no is the quick answer. I'm a bit rusty. Let's stick with this. I mean, it's been a great year for gold. You know, it's been something of the perfect storm, hasn't it, for gold? This is the daily chart for gold. So if we go back to the end of last year, where was it? $2,600 an ounce. Yesterday saw all-time highs again, up at $3,500. So that's a $900 move on the year, which is it about 30%? Something like that. That sounds about right, doesn't it? I think something like that. Big move in gold, and something of the perfect storm, you could say. You know, because what have we had this year? Just in case we haven't been paying attention, we've had falling stock markets in the last, what is it now? It's only like 6 weeks, isn't it? But the last 6 weeks or so, we've had falling stock markets. So again, in times of uncertainty, gold has historically been attractive to investors. Then we have a weaker US dollar, and of course the price of gold moves inverse to the US dollar. So if the dollar is falling, typically we'll see a rising gold price, and just global uncertainty. And we have got that by the bucket loads at the moment, haven't we? Particularly, of course, because of what's been happening with tariffs in the US. We had the IMF, the International Monetary Fund, was it yesterday, I think, downgrading the world economy in terms of growth. So it's the perfect storm for gold. Even more perfect than we had, back in COVID times. If we go back, when was that? 2020. Back then, what did gold do? So gold bottomed about 1460 in March and ran up to 2000. So that wasn't quite a 50% move, was it? But it was, a big old move in gold. And here we are, all-time highs on a really regular basis. If we look at 2025, so coming into 2025, what was the previous high? Around about 2,800. and it broke through that in early Feb. And since then, we've had a steady progression, whatever, of the market going up, go sideways for a bit, and then bang, off it goes again. And again, just in the last, couple of weeks, we've seen the price up about 15%, something like that. Anyway, I think it's an interesting one. It's an interesting one at the moment anyway, considering what is going on in the world. But I think it's interesting for the next couple of days because of the move we've seen since yesterday. Yesterday, about 7 o'clock UK time was when the all-time high was hit. And on here, it was about 8 cents below $3,500. Since then, it's dropped off, and we're back to, it went below 3,300. But for me, I am a trend follower. The trend in gold is undeniably up, and all this year and further, whenever we've seen sell-offs in gold, they have proved to be short-lived. So from my point of view, I'd be looking to be a buyer. I think there's some interesting levels to watch. If we look at what were these lows? When were these lows from? 17th of April, so just over a week ago, or just under a week ago. So last Thursday, we saw around about $3,280 an ounce was the dip before the price moved higher again. You can see that has held. This is the hourly chart we're looking at. So that did hold this morning between 7 and 8 UK time this morning. We saw that level hold. So I think that's an interesting one to watch. We've seen the bounce off there. So for me, I would be looking to see if we can get the run back up to the old highs, and if not further. If that 32.80 goes, we got bigger support back at 31.90. But overall, betting against that trend in gold and selling short would have been an expensive business this year because the price has been so strong. So really interesting market, knocked over the last 24 hours. Let's see if it holds for the rest of the week. Obviously, if we're looking at something like the RSI, gold has been overbought on various occasions this year. So this is the relative strength index down here. But as we often see in these strong trending markets, as the famous saying goes, the market can stay irrational longer than you can stay solvent. So if we're short in gold and the wrong side of that move, the market has stayed irrational, probably for a lot longer than plenty of people have been able to avoid margin calls. So overbought there, overbought mid-March, overbought again in March, and overbought over the last couple of days. The last time we had an oversold signal on gold from the RSI, we got to go back to November last year. So it shows how strong this market has been. So really interesting to see what happens, for the rest of the week. If we were going to pick up on like a trend line on gold, then I would probably be looking at from perhaps Christmas time, something like that. And our trend looks something like this, So for me, it would take weakness through probably $2,950, $2,950 an ounce to suggest that this trend in gold is changing. And so far, so for me, that's why I'd be a buyer of the dip. So really interesting to see what's going on in gold. Let's take this chart out. If you look at the weekly, I was looking at this yesterday with somebody, and I thought it was interesting. Let's just hide the RSI for now, and let's get rid of that. We've got to go back to, it's like the late 70s, early 80s. I don't know how clear that's going to be on YouTube, but perhaps have a look at it yourself as well. Have a look at gold on a weekly chart. We've got to go back to then to see, the sort of, I don't know if it's parabolic, but the extremely steep rise that we've seen in gold over the last 12 months, and back then, I don't have the data going back, but, it was a big old rise where I think the price more than doubled before eventually peaking and then going nowhere for, it was more than 20 years in the end. Even the rise we saw in 2000 after the financial crisis, 2008 into 2012, was it? Late 2011, wasn't the same sort of rate of acceleration that we've had in the price of gold over the last 12 months. So really interesting market. Buying the dips has been a profitable strategy. Doesn't mean it's going to carry on being a profitable strategy, of course, but let's see. But some levels to watch this week in gold, and for me, that the first one are the lows from last Thursday. So it's been a really interesting market, really interesting year, and carries on going up. So let's see what it does for the rest of this week, the price of gold. While we're on the metals, if you have a look at silver, it is a different kettle of fish. Silver, it has not. I mean, it's had its moments in terms of surges, but the last time we had a multi-year high on silver, we've got to go back to October last year, and since then, it's had its runs, but nowhere near on the same sort of scale as gold. So for me, it's been not the most interesting market, silver. That's where we are in the great scheme of things over the years. Absolutely, it has gained over years, but gold has definitely been the star performer out of the shiny metals, in recent months. So silver, a bit of a dull market, I think, silver, and it just, for now at least, it can't get through this, whatever it is, $35 an ounce, something like that. So not as interesting to me, silver, as the price of gold. So there we go. I think it's clearly been one of the hot markets this year. But let's take a step back and look at US stock markets first of all, and other stock market indices. Let's start off with the S&P. Again, of course, it's been an interesting year. It's been a bit of a brutal ride, perhaps, over the last couple of months. S&P hit all-time highs end of Feb, around, 6150, something like that. It was traded as low as 4,800 a couple of weeks ago, so a 20% fall in the S&P. And there was a lot of chat back then that, the market's fallen 20%, it's in a bear market. I don't think descriptions like that serve much purpose. I don't think you can say, just because the market's dropped 20%, 23.6%, 18.2%, we're in a bear market. We've got to see how the market performs. Clearly, it is a big fall. Over the years, I think for me that the last bear market we had was 2022. The S&P peaked before the Russian invasion of Ukraine. Obviously, that added to the pressure in the market, and it slid into October 2022. So we had about 9 months of falling markets before the market recovered, turned around, and went into the run that peaked in Feb 2025, Feb of this year. I think it's a difficult market to trade because of the volatility. If you just let's just look at this week, and then we'll go back to the bigger picture. If we look at Monday lows, were down around 5,100, and here we are at 5,400. So we're only 2.5 days into the week, and the market's moved 6% already. So incredibly volatile market. It was interesting. I was actually short the Nasdaq last night, and I got stopped out. We had a gap last night. So this is the what is it? It's the S&P, and we had the market closed wherever it was last night around about 52.85, and then there was a period where the out of hours market is shut, and then I think was it President Trump saying he had no, he wasn't going to try and get the head of the chair of the Federal Reserve fired. Was it something like that? I don't know. But anyway, we had the gap opening. It's a big gap opening from where the market closed last night. So we saw a strong overnight session in the US. Let's see how it trades in a couple of hours' time when things open again. But, looking at the hourlies, massive volatility again. But at the moment, I think what's perhaps a bit confusing for me, if we go back a couple of weeks, this was that news where President Trump said there was going to be a pause on tariffs for 90 days. Clearly, markets liked it, rallied off the back of it, but haven't made much progress since then. So for me, in the short to medium term, that's the big level to watch. Those highs from, was it the 9th of April, 2 weeks ago? The post-tariff pausing highs. That's a catchy name for them, isn't it? I think if that breaks, then we could maybe see more recovery. If I was looking to go short, at the moment, with the market trading at 54.08 or thereabouts, I'd be looking probably to have stops up above that level. So I think that's interesting. for today and for the rest of the week. But overall, after plenty of excitement and sell-offs since Feb, we've just had a very broad sideways range in the S&P over and US markets as a whole. Over the last couple of weeks or so. If we have a look at the Nasdaq, we'll see the same again. That's the tariff highs, tariff pause highs, around about 19,260, 19,270 on the Nasdaq. And it's all been a bit sideways since then, but in a very wide range. Let's see what the rest of this week brings. But I think for me, in the short term, that's the level to watch. And we still have nervous markets. I don't think that needs saying, does it? I think we know these markets are nervous. There's the daily chart of the Nasdaq. We had a low a couple of weeks ago. It was the lowest the market had been since January 2024. So, what's that? 15 months worth of gains erased in 2 months on the Nasdaq. So for me, I'll be watching that post-tariff pause high thing to see what happens. Let's take a look at some other markets. Actually, the Nikkei. The Nikkei, this is the dailies on the Nikkei. The Nikkei, obviously, like everything else, has been knocked. The Japanese market knocked back to where it was in August of last year. So you could argue it hasn't been knocked as much as US markets, but then actually since August last year, it didn't make a fresh multi-year high anyway. So it'd been a bit sideways anyway, the Japanese market coming into all of this turmoil that we've seen over the last couple of months. So again, it's a little bit boring. Halfway through the range at the moment, the Nikkei, if you look at the range since last August. So not a lot to say about that one, really. And I think we need to see these US markets make up their mind until we see perhaps a more interesting Japanese market. If we have a look at the DAX, I did buy the DAX yesterday. So that did okay. And I think I'll just come out of it. But again, the DAX, of course, the DAX was another interesting one. When we saw these US markets stalling from February, the DAX did carry on. The German market did carry on going higher for a bit, and it was massively outperformed US markets this year. The DAX ended last year around 19,800, traded as high as almost 23,500. So what's that? I've got to do the maths quickly. About 4,000 points, 20% into late March, the DAX, and then succumbed, of course, as the tariffs were announced and all of that. So the market has sold off. It's bounced back strong. I think what's interesting here is this is the dailies for the DAX. That was that day 2 weeks ago, the post-pause tariff high thing. The DAX broke out through it yesterday and is holding through it today. So arguably, if we're looking at relative strength, the DAX, the German index, is stronger than US indices at the moment because we are through. Those are the highs, the tariff highs. So for me, if I had to buy one or the other, I'd probably be a buyer of the DAX rather than the US markets at the moment because it is through those highs. But again, let's see how it all unfolds over the next few days. See what these markets do. So for me at the moment, looking at the DAX, is this yesterday's low? What was yesterday's low? It was that's the out of hours low on Monday. The DAX was closed on Monday because it was Easter Sunday. Yesterday's low, I think, is around 21,000, something like that. Yeah, yesterday's lows are about 21,000 on the DAX. It's currently 21,800. If we saw a sell-off this afternoon or into tomorrow, I'd be watching that 21,000 level to see if this trend continues. So I think that's interesting to keep an eye on the DAX. I'd be looking to buy the dip there, but perhaps be a bit more patient on it. Have a look at the FTSE. The FTSE, the UK index. This again, this has done better than the DAX in terms of breaking through levels over the last week. Of course, the FTSE, a different makeup to plenty of other indexes, stock market indices, because why? Because it's more defensive. A more defensive makeup of blue chips. So the FTSE's done well, back up to 8,400. So only 500 points off that all-time high, which is about, what's that? I can't do the maths again in my head. about 3%, something like that. So the FTSE's performed well. So again, at the moment, I'd be a buyer of the FTSE on the dip. I've logged into a different account today. For the next time round, I'm going to make sure my account is set up. You can see complete registration. I've got to finish my registration, and we'll do some trades on the next session of this. But again, in the FTSE, I'd be a buyer of the dip in the FTSE. Let's see what the next couple of days are like. So those are stock market indices. Interesting. European indices, arguably outperforming the American ones at the moment. US markets, looking at the NASDAQ, still capped by those old post-tariff highs. So, plenty to watch. So, to be honest, this afternoon, I'd be tempted to be a seller, I think, of these US indices. Let's see. Let's see what happens, and if we do get back near the old highs. Another interesting market. We started things off with gold at the beginning. An interesting market over the last week has been the oil price, right? So this is US crude. So if I take a look and go daily chart of US crude, obviously the threat of tariffs and all of that hitting, and anything that slows down the world economy, will usually put pressure on the price of crude oil. Let me flip this over to a weekly chart. Here we go. Not gold, crude oil. So crude oil, a couple of weeks ago, traded down to its lowest levels since here. So Feb 21. So we saw a 4-year low on crude oil. And if you fill your car up with petrol, you will have noticed it at the pump, how cheap petrol prices have been compared to the last couple of years. But so crude oil hits a 4-year low. But it's rallied since then. And I think what's interesting for me, if we flip this over, it's probably the hourlies I want to look at here. Here's the rally in crude. You could absolutely make the argument, because it's true, the trend in crude is still down. If we go back to, this was the Russian invasion of Ukraine highs, up about 125 a barrel. So it's more than halved from where it was 3 years ago, down to those lows, whatever those lows were, 55 or thereabouts. So that trend, is still down. We had a lot of sideways from March 23 all the way really to now. So a couple of years of quite a wide sideways range. But what's interesting for me in crude is the current recovery. The current recovery is still going. Again, this high here, let's just pick up on that, whatever that level was, about $63.50 a barrel, had been a problem. We saw it spike up beginning of April, sells off to that 4-year low, get rallies, can't get through, rallies, really can't get through that level. But about a week ago, pushed through, sells off, and it's pushed through again. So at the moment, this, for me, at least, that recovery in crude oil is still going, and looks something like that. So I think it's another one, an interesting afternoon in crude. It's selling off over the last couple of hours. It did hit a fresh recovery high earlier this morning, UK time. We've got these lows from earlier in the week, from Easter Monday. Got lows around just below $62 a barrel. So I think a deeper sell-off would be interesting here to see if it's a buying opportunity. Yeah, and see if this recovery is going to continue. So it's an interesting one, because we've got a recovery that's been going for a couple of weeks. That's still going. The bigger picture is the trend is still down. So ultimately, I'd have to say, well, the risk is this recovery is going to run out of steam, the same way the recovery in March did. I mean, how long did that go on for? 10th of March till the 2nd of April. So we had a 3-week recovery there, where eventually it was a big move. The price dumped about $17. Of course, that's when all the tariff stuff was being introduced. But let's see what happens with this one this time round. So I think that's another interesting market to watch. The price of crude oil. Natural gas, an old favourite, crazy market. Natural gas, not as crazy as it used to be back in the old days when I was last doing this, I think, when we saw it up at $10. But this is where it is at the moment, natural gas. I wonder, if you look at natural gas over the last, the last year or so, it has been trending higher. We had a multi-year high in natural gas in March 2025, highest it's been since December 22, and it's sold off since then. Again, it's a big move. It was up at around about $5 Not quite $5, but almost $5. And now here we are trading at 3. So it's dropped more than 30%, not quite 40%, in the last 6 weeks or so. I think it's interesting down here, natural gas. It's still weak this week. But, on the way up, there was quite a bit of support around about 293. So I think that's another interesting market to see what happens up, down at these levels if we see it continue to weaken. I hate natural gas because it is so volatile. So I don't trade it very often. But interesting to see what happens down here. Perhaps it'll be a better market for you. So that's natural gas. Let's have a quick look at some currencies. We've seen the dollar hit a multi-year low, again because of tariffs, of course, and what that might mean for the US economy and blah, blah, blah. So, of course, when the dollar's hitting lows, we see other markets such as gold hitting highs and the euro. So euro dollar traded to its best levels since, where have you got to go back to? Here somewhere. November 21. So a 3-year plus high for the euro against the dollar. So it's gone from just out of 1 to 114. So what's that? About a 12-13% rally in the euro since the Jan lows. And it's interesting because, again, it hit a multi-year high on Easter Monday. It's backed off since then. Let's take a look on the hourlies. Where's Monday? There's Monday. It's backed off since then. But these old lows around 112.50 have held. So again, a bit like gold, when we have a market that's so strong and it sells off, to me, it still looks like a buying opportunity. So interesting to see what the rest of the week looks like for the euro against the dollar. And of course, the likes of the pound against the dollar and all of that. So lots to watch there. Let's see how it performs. Of course, very dependent on what happens with the US dollar. If the US dollar stages a massive comeback, then that is going to put pressure on the euro. But overall, I'd still be a buyer for now of euro against the dollar. And Bitcoin, let's have a look at Bitcoin. This has been interesting. This has been quite stable, really, by Bitcoin standards and by what else has been going on in markets. If we go back and look at the really long-term picture for Bitcoin, it has been in this uptrend for a long time now, for a couple of years now. And of course we had, what does it look like? I don't know, something like that. It's a long way away from that uptrend line. But, we had the all-time highs in Jan of this year, up around $108,000, $109,000 per coin, slipped back to 75-ish, which again is a big old fall. It's was it about 30%? Not far off 30% fall. What's interesting to me was that 75 or thereabouts was the old high from March 2024. So we have that idea that old resistance becomes support and all of that, and so far we've seen a strong rally. So I think it's interesting. If I was trading Bitcoin, I'd be tempted to wait to see if there's a retest. We've seen it. So we had downtrend, breakout. Do we get a bit of a retest? So I'd be interested in perhaps buying a dip in Bitcoin with a stop the other side of whatever the lows for the year are so far, around about 74, something like that. Let's call it 74.4. So I think that's an interesting one to watch. It had been, fairly boring considering what was going on everywhere else. But let's see what happens with that one. But perhaps we're seeing it break out of that correction it had been in since the highs in January of this year. Let's see how that all works out. And finally, let's have a look at an individual stock. We had results from, of course, everyone's favourite electric car company, Tesla, last night. And I think they weren't very good. But Mr. Musk said he was going to spend a bit less time sorting out the American government and spend a bit more time on his car company. So looking at the news, that's not. I'm just having a quick Google. Tesla profits plunge as Musk promises he's ready to step away from his role at Doge. So let's have a look at the headline numbers. Blah 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 blah. Oh, where are the numbers? I can't find them. Hang on a second. Tesla profits dropped 71%. There we go. So that was the quarterly earnings. It's all reading the headlines. It's all about what Musk was saying. Mr. Musk was saying about stepping back. So 71% dip in Tesla profits. I'm guessing that is for the quarter. Profits and revenues dipped in the first quarter of 2025. 9% drop in revenue year over year, blah, blah, blah. Profits slid 71% to 409 million compared to 1.4 billion in net income the previous year. And all the lights have just gone off in this room, which is a bit odd. But so hopefully you can still see everything. So that they dropped, but we saw them move in the overnight last night. So what was the overnight last night? So Tesla shut at, where was the close last night? There we go, $237 a share. Here you can see the earnings and the volatility. But at the moment, again in the out of hours, they're trading about $17 higher. So that's about 7% higher than where they closed last night, the Tesla stock price. If we have a look on the dailies, it has been a pretty brutal year for Tesla. There was the surge after the US election where we saw Tesla stock were trading. Where were they trading? They were trading around $244 a share and then traded up to $488. So, pretty much doubled after the US election. And here we are. We're back now to where we were before the US election. So all of that stuff has been discounted out. So interesting to see where they trade today. I would say, it's a volatile one. I would say it's interesting to see what happens down here, but perhaps we're through the worst for Tesla stock. Let's see. I think an interesting one to watch for the rest of this week. We did have, again, if we go pre-US election, it was gently recovering since April of last year. These lows, let's call it $200 a share. Let's round it up to 200 because it's pretty volatile. The 200 level ahead of the US election had been support. Let's see what happens in the weeks ahead and see if Tesla is past the worst. Do investors take the news that Musk is going to spend more time on this as a positive? Blah, blah, blah. Let's see what happens. So that's an interesting one to watch. So that's it. So if there are no questions from anybody, we'll start wrapping things up there. So lots to watch this week. Gold's an interesting one because we had all-time highs just yesterday. The market's had dropped back a couple of $100 for that. Let's see if it holds. Let's see what happens with that one. But for me, I'd be tempted to be a buyer of the dip. But let's see how that works out. US markets gapped higher overnight, but still trapped below, for now at least, those highs set when the tariffs were paused. So are they going to be a problem again? At the moment, I'd be betting that yes, perhaps they are going to be. German market, the DAX, has taken out those tariff highs, a good run, but has been backing off the last few hours. Let's see what happens there. I'll be a buyer. And oil, the recovery we've been in for the last couple of weeks, for me, is still going. Interested to see where this dip stops. Let's see how that all works out. But we'll wrap things up there. So I hope you found it useful. Probably be doing this every Wednesday lunchtime. So if you haven't subscribed, if you could do the usual, if you could subscribe, like, all the usual YouTube doodah. And we'll be back in a week's time and see how things are. So until then, good luck with your trading. I'll see you all then. And I'm going to try and figure out now how to stop this live stream.